Bulls maintain the winning momentum on Dalal Street after a sluggish start. Nifty moves closer to 21,500. Blue chips lead the charge.
Public sector companies continue to shine. The Nifty PSC index is up 77% so far in 2023. This is the best annual performance in 14 years for that index.
Shares of Hero MotoCorp, Bajaj Auto and TVS Motors rally after Ola Electric files for a IPO. Sources say Ola is eyeing a valuation of over $7 billion. This is the first public offer by a pure-play EV company in the country. Hello and welcome to a fresh new edition of Markets Forward, the show where we aim to get to you everything that you need to know as you wrap up one day and look ahead into the next trading session. I'm Prashant Nair. With me, my colleague Bandyopadhyay. Sudip, hi.
Hi Prashant, quite an interesting session today and gains on the board. And of course, over the next half an hour, we have plenty of ground to cover. Yeah. We are going to wrap up all of that action for you in the next 20 minutes. All the big news, the key developments on the street today, of course, all the top corporate voices and the events that you need to track as we go forward. Let's, of course, kick it off with the day gone by and plenty of green. I think Bulls in top form as we get to say goodbye to 2023.
What can we say, right? Another 100, another century on the Nifty. So, last Wednesday was that sharp sell-off, but how the market has moved on since then, right? I mean, that day was 2%, 3%, 4% falls, depending on what index you looked at. But we're almost back at where we started. I mean, where we started, of course, the fall happened from an all-time high. We're not there yet, but we're not very far away either. Close on the Nifty is just under the 78.6% retracement of 21,461. Just 20 points under it. That retracement is nothing. It's just the Wednesday is high, the all-time high to the Thursday is low from where the market bounced off. And of course, the all-time high then is closer to 21,600. Except IT services and maybe media as a sector, which is small, but IT is the big one. All sectors in the green, and the leader of this bull market, the public sector space. And we're not just talking about banks. We're talking about everything in the PSU space that kind of continue to shine on. Defense as a space, it had taken a bit of a break after spectacular performance in 22, early 23. Last few months had not done very well. But that pack is back again with very strong gains. Shipbuilders in particular, Mazgaon Dock and Cochin Shipyard, etc., really up about between 5 and 10% depending on what you looked at. So spectacular start last week of the year, yeah. And going out in style.
Oh, absolutely. The Bulls are reminding us who's on top, as if we needed any reminding. But then that's the way this last week has kicked off. And we had good support coming in from the kind of inflation print that we had from the US. So just a reminder there that the November PCE number that we had from the US that continues to show that US inflation is on a bit of a declining curve, and that's good news. And some of that positivity is simply rubbed off on the markets that were trading today. Of course, US isn't trading. Most of the European markets aren't trading. A lot of Asia wasn't trading, but the ones that were, some green on the Nikkei, some green on the Kospi. China is a different story, and the decline there continued even today. The mainland Chinese market that was open, Hong Kong wasn't. But for us, I mean, the indices are up there for you, and it was a very uniform kind of a rally. It was not restricted to only mid caps or only, one or two large caps. Even banks participated by the end of it. So it was fairly sort of well-rounded. As Prashant mentioned, PSUs continues to be the star space of the market, and we'll talk about a lot of these stocks as we go forward. But then there was metals, there was commodities. The metal index was up and about. A lot of the large cap metal stocks did well, as did the PSU metal stocks for that matter. The only island of red really was IT, that too large cap IT, and that's because of this deal cancellation that Infosys announced as we got into that long weekend, and that kind of weighed on that side of the market. But all in all, then the Bajaj twins, and we'll tell you why those stocks were down about 2% apiece as well. But barring that, nothing really problematic. The Nifty now is less than 150 points away from making fresh all-time highs. So who knows? Maybe we get that before the year closes out. So that's the wrap of today's action. Let's now bring you the lineup of what we have in store for you on the show today. We will start off with the top movers of the day, and Vivek will have all that action for us. Well, today all eyes were on Ola Electric as it filed its DRHP, gearing up for the IPO next year. The other stock on the radar was Reliance, and we'll tell you why in just a bit as well. CNBC-TV18's popular segment, D Street Chatter, also coming up with Nimesh and all the action from dealing rooms. He'll tell us why Castrol in specific was buzzing around in today's session. Last but not the least, we delve into the key market events to watch out for tomorrow. So let's kick it off first with all the big stock action of the day. Vivek, over to you.
Well, absolutely. Like you mentioned, another good day of strong gains. A lot of stocks on the radar, from specific segments. The first segment that we're looking at is the pharma companies, especially generic API makers. All of these stocks up on very strong volumes. Laurus Labs are up again over 5% in the session today. Torrent Pharma, Solara Active, and another smaller name, Saker Healthcare, this particular stock too, up on strong volumes. The next segment of the pack that we're looking at is the fertilizer pack. All of the fertilizer stocks today up on very good volumes. Nagarjuna, up over 9%. Two companies from the same group, both Chambal as well as Zuari, continue their up move. Last week also they did very well. Today again, both of them moved higher. You did allude to the defense stocks today. A lot of the defense stocks, mainly on order cheer, doing very, very well. Bharat Electronics comfortably beating its FY24 order inflow guidance. Today getting more order wins. Along with that, Bharat Dynamics, Garden Reach, the shipbuilders, Mazgaon Dock, Cochin Shipyard, all of them doing very, very well in the session today. The next stock on our radar is J. Kumar Infra. Today morning, there was a note from CLSA. They've significantly upped the target price. On the back of that, the stock hit the upper circuit. They believe that the company is well poised to get incremental order inflows from the urbanization and the urban order wins that are coming in. The next stock, Castrol, this particular stock up, almost 20% in the last 6 sessions. Lubricant makers continue to do quite well. Tata Chemicals, we'll wait and watch in case there's any news flow on this particular name. But today, this particular stock up 7% on strong volumes. And Embassy REIT, in the dying hours of trade, we did tell you about the fact that there was a FTSE, weight up or a weight increase. And again, this particular stock up quite significantly just in the last hour. On the other hand, some of the stocks that were seeing significant selling pressure, the entire NBFC pack, even today's listing in the NBFC space was quite muted. So IREDA, Muthoot Microfin, Muthoot Finance, Manappuram Home First, all of them taking it on the chin in the session today.
All right, Vivek, thank you very much for that. That's a pretty snappy but exhaustive summary of the day's action. Sudip Bandyopadhyay is with us. He's Group Chairman at Inditrade Capital. Sudip, good to have you with us here. I just want to start with the defense space. Still, if you look at it, if you look at institutional ownership, it's kind of under-owned. I think September onwards, it's kind of taken a bit of a break. But are we fresh signs as we get into 2024 elections? I mean, it's of course it's business to government, right? I mean, government is the largest participant in that sense because the orders come from the government. What's your sense? And what do you like here if you cover or own any of these names?
Prashant, I used to own Mazgaon. I do recommend Bharat Electronics, but I'm a bit scared, honestly, the way the stocks have moved up. Up to a point of time, I think, they deserved a better valuation compared to what they were putting, let's say about a year back. And then they kept on increasing. And even now when I see, let's say, Mazgaon Dock moving up and touching new highs, honestly, I'm a bit scared. Look, these defense contracts, getting one after the other defense contract is a fantastic news, no doubt. But it doesn't translate into profit or profitability immediately. It's a long gestation contract, and this will take years for them to execute. Also, remember, we can't extrapolate that they will start exporting, they'll start sending to other countries and all that. That doesn't happen in defense. It is very, very restricted, and government will pick and choose where they can sell, where they can't sell. I'm not talking about Mazgaon Dock only. I'm talking about defense in general. So, it's not an open market really that, the company is doing well, they start going out and getting orders from foreign countries and start exporting. It doesn't work that way. So I'm a bit skeptical, and I think one needs to exercise caution. These are good companies doing well. They will continue to do well. Government focus on defense, make in India is great. But, at what valuation? That's the question. Whether the Mazgaon Dock valuation or the HAL valuation today is really the right valuation, I have my doubts. As far as Bharat Electronics is concerned, I still think for a long-term investor, it still makes sense. But many other defense, particularly the shipyards and all, I'm skeptical.
Okay, so tread with a bit of caution, perhaps. That's the advice on this PSU/defense space. Sudip, hi, good afternoon. I want to ask you about Bajaj Finance. Once again, it was, in the crosshairs today, in the line of fire on the wrong side, down about %. This time around, the issue is with some co-branded credit cards they have going with the RBL Bank. But, this issue aside, Bajaj Finance has really struggled this year. I mean, the index is up some 16-17%. The stock's done about 8-9% at best. So what's your thought around it, and how would you approach it as we look at 2024?
So maybe a couple of things. I think, last few months, they had few reversals, I would say. One is this co-branded credit card issue. The other is these small loans on which the risk weight has increased. And as an NBFC, they get hit twice. When they borrow from bank, the risk weight is high, so the pricing will be inferior. And as far as their own book is concerned, because the risk weight is high, the loan to the eventual customer will cost higher. So I think, these two setbacks, one in the small loan, unsecured loan business, the second is this co-branded credit card specifically space. There's a bit of a setback, but it's a very well-oiled machine with a fantastic track record of performance over decades. I have no doubt about their success going forward. So yes, these setbacks are definitely there. Probably it will take a little time for them to get into different and more products and find productive ways of utilizing capital. But it's just a matter of time. So from a long-term investor's point of view, there is fundamentally nothing wrong in Bajaj Finance. Obviously, FinServ has other businesses which are also doing good. So there's absolutely no problem with either of these stocks. And, these opportunities may be a good buying option, buying window for long-term investors.
All right, Sudip. Hang in there. Shares of TV18 and Network 18 surged on the back of reports that Reliance and Disney plan to merge their India media operations. According to reports, Reliance has signed a non-binding pact to merge Disney's India operations in a deal that could conclude by February of 2024. Mangalam is here with details. Mangalam, take it away.
Prashant, you said it all. In fact, as news reports do indicate, Reliance and Disney, there is a deal which is in the works. What we understand is that they've entered into a non-binding agreement for merger of Reliance with with Disney Hotstar's Indian ops. By Reliance, I mean the media companies of Reliance itself. And the reason why TV18 and Network 18 were buzzing around in today's trading session was, remember earlier last week we had the news of the mega merger that came in the media sector itself, with TV18, Network 18 and all the entities merging into one itself. And now there are news pieces with regards to the acquisition. Now, while this would be a big media conglomerate that would be created when it were to happen, the other thing we'll have to watch out for is a lot of synergies along with Reliance's ecosystem that will come about as well. What we understand from those reports is that Reliance will hold 51% stake in this merged entity, whereas Disney will hold 49%. And at the same time, the deal will happen in a combination of shares as well as cash, expected to complete by February 2024 itself. Of course, all of this goes with the standard disclaimer that TV18, Network 18, Reliance are all owners of the channel that you are currently watching.
Okay, Mangalam, thank you very much for running us through all of those details there. So that was reason why some of these TV18, Network 18 stocks were in focus. Let's move on then and bring you some action from the primary markets. Ola Electric has filed its DRHP targeting an IPO early next year. This is the first public offering by an auto company in the last 20 years and the first pure-play EV company eyeing a listing on the Indian bourses. The company is looking to raise about 5,500 crore rupees via this issue, and it's eyeing a valuation of $7 billion. Founder Bhavish Agarwal is looking to offload about 3.48% stake, nearly 3.5% stake in the company. Parikshit is joining in with more details. Parikshit, this promises to be a pretty high-profile issue as and when it hits the street.
That's right. Ola Electric looking to raise 5,500 crores from the sale of 9.5 crore shares at a face value of rupees 10. Promoter Bhavish Agarwal is looking to sell 4.7 crore shares in the company. Out of the total fundraise of 5,500 crores, 264 will go towards the Gigafactory, 800 crores will go for debt repayment, 1,600 crores for R&D, 350 for business expansion. As far as financials go, the total liability stands at rupees 3,600 crore currently compared to rupees 3,217 crore in FY23. Liabilities have doubled from FY22 to FY23 from 1,734 crore to rupees 3,217 crore. Loss for the first quarter of FY24 came in at rupees 267 crore. Losses in FY23 amounted to 1,472 crore versus 784 crore in FY22. Strong revenue growth as well for Ola, up 8x to rupees 2,631 crore compared to 373 crore in FY22. Revenue for FY24 so far came in at 1,243 crores, which is nearly 50% of the FY23 revenue. The EBITDA loss for quarter one of FY24 came in at 218 crores compared to FY23 EBITDA loss of 1,252 crores. In terms of future plans, the Gigafactory in Tamil Nadu is likely to be operational by March next year. Ola will produce cells at their own Gigafactory for existing and future products. Deliveries of Ola S1X in the 2 kilowatt-hour and the 3 kilowatt-hour capacity will begin by H1 of FY25. They will commence deliveries of motorcycles in H1 of FY26, and they will also expand their portfolio to cover mass market motorcycles and scooters. The company has sold close to 2 lakh electric vehicles in FY24. The capacity utilization was 37% in FY23. The employee attrition rate was 47% for the last fiscal. In terms of risk factors, Ola may continue to incur operating losses in the near term. They also say in DRHP the reduction or elimination of FAME and PLI could adversely impact demand. Expansion of Ola future factory may also be subject to delays, cost overruns. Warranty reserves may be insufficient to cover future warranty claims. They will also require a significant amount of capital, which they may be unable to obtain at favorable rates. This is what the DRHP says. In terms of the path to profitability, sources say Ola is projecting sales of 3 lakhs in about FY24 and 9 lakh units in FY25, and they hope to achieve EBITDA profitability of 6.6% by FY25.
All right, Parisha, thank you very much for that sort of, pretty comprehensive look at the Ola DRHP at this point in time. Sudip, from a secondary listed space, auto stocks did very well. I'm not sure whether that is the Ola rub-off, but, we've seen this over and over again. A new sort of company, maybe in the same space with lots of incumbent listed players, tends to make the incumbent players look pretty cheap. I'm not sure if that is what's happening here. So if Ola is asking for a $7 billion valuation, you look at something like TVS, right? Which has got a 20% share in electric vehicles, and of course it's got its ICE portfolio. It's got an $11 billion market capitalization. So suddenly you start to wonder whether TVS is undervalued, or Bajaj, or Hero, the incumbents. Your thoughts, Sudip?
Yeah, absolutely right, Prashant. I think that's what pretty much made the market excited about these existing TVS, Bajaj, Hero. But I think one has to be a little cautious. We have seen this movie many times. Loss-making, promising companies come with an IPO at fancy valuation. Then they suffer in the market for a very long period of time. We have seen what happened to Paytm, what happened to Zomato, what happened to Policy Bazaar, and pretty much all these loss-making new generation companies. So I would be very cautious and advise investors caution as well. While Ola Electric is talking about a valuation which is much better compared to where the existing established players with even much larger market share in the EV space are quoting. So I think one has to be extremely cautious as far as Ola Electric IPO is concerned.
Okay, all right, got that view. Sudip, thank you very much. Appreciate you taking on the time and being with us on the show today. Have a good evening and a good rest of 2023. In case we don't speak again, season's greetings to you and wish you a very happy new year in advance. All right, with that, let's move on and let's take a look at our top corporate voices today. Surat-based specialty chemicals manufacturer Anupam Rasayan has signed a letter of intent worth $61 million with a leading Japanese chemical company. The letter of intent pertains to supply of a new age polymer intermediate. Speaking about this LOI, the deputy CFO Vishal Thakkar said that the company would be the only firm in India to manufacture this specific polymer, which would be used in the aerospace and semiconductor industries. He added that Japan has become a huge market for them and sees huge growth potential. He also said that while demand in the US was strong, they were witnessing weak demand in Europe.
Okay, well, that's Anupam Rasayan. And of course, I mean, that's just, news about that company. But I think the broader expectation is that for chemical companies, there is a bit of a turn coming after a pretty poor 2023. We also spoke with Inox Wind. The stock was higher in trade. It's up 300% this year in 2023. They backed an order for 280 megawatt. It's a turnkey order from a large commercial and industrial player. Speaking about the firm's prospects with us earlier, Devansh Jain, who's executive director of the group, said that their order book now exceeds 1550 megawatts. They expect to announce more orders before the end of FY24, which should hold them in good stead, not just in 25, but also some portion of FY26 as well. They also seem pretty optimistic. They said analyst estimates of 440 crores of PAT in FY25 seem very reasonable, and they're very confident that they'd be able to beat it, pretty easily. Listen in to a quick soundbite of the conversation.
What we've announced today is a 280 odd megawatt order. It's a 180 megawatt pure play equipment supply with very limited scope, turnkey, services, as well as a 99 megawatt turnkey order. The thumb rule order value ranges between 7.7 crores to about 8 crores per megawatt for a turnkey order. So in order of magnitude, this would be an order win in excess of 2,200 crores. In terms of order book, I think we were at about 1,276 megawatts as of 30th September. And I think with this order, our order book exceeds 1,550 megawatts.
All right, with that, we'll take a very quick break. We'll come back on the other side and get you the popular segment D-Street Chatter, along with all the top market events to watch out for tomorrow.
CNBC-TV18, embarking on a quarter century of excellence. CNBC-TV18, embarking on a quarter century of excellence.
Well, Welcome back. You're with us on Markets Forward, and it's time to quickly figure out what the latest buzz was in dealing rooms. Today we have Nimesh with the latest on the D Street chatter. Nimesh, fill us in.
Hi, Sudip. Another strong day for the markets with the chemical sector doing a big move. A lot of individual stocks buzzing in the chemical space. In terms of individual stocks, let me address the two large blocks. The first one is Solar Active Pharma, big block, 5.5% equity, got changed hands in today's trade. I understand it's a clean out trade, and after that we saw a big move in that stock as well. And the buyer's name could be interesting there. So that's the first one. The second name where there is a large block was Arman Financials. Even there was a block of nearly 4% equity got changing hands. And I understand the venture capitalist fund who owns close to 21%. They were sellers in today's block. So even there, the disclosures could be interesting. The second name is Castrol. After a long time, some bit of interest seems to be back in Castrol. Big move in today's trade as well, up 13% and on large volumes. I understand an influential HNI investor is an active buyer in Castrol of late. The third name is Laurus Labs. Even that is buzzing in trade. This month, the stock is up 13% and has really outperformed the pharma names. And again, the street is anticipating some sort of a corporate development, including the company winning a large CDM order as well. So that's the buzz on Laurus Labs. And the fourth name is Arvind Limited. A big move in that stock as well, large volumes as well. So I understand there are strong buy flows that I fired us. So expect high delivery volumes for the third consecutive day in Arvind Limited.
All right, Nimesh, thanks very much for that. So we'll keep an eye out on all these names as we come back tomorrow. But as we wrap, let's sort of cast a glance on what the events are when we come back tomorrow. We had three listings today. Mangalam, what's on the list tomorrow?
Two listings tomorrow. We have Credo Brands, which is the owner of Mufti, that lists the IPO, saw a subscription of over 50 times, also 80 times subscription for Happy Forgings. Let's see whether those investors in the IPOs, the ones who got allotted, will turn out to be happy or not. The other ones that we'll be watching out for, Vedanta. Vedanta goes ex-dividend tomorrow. So if you open your accounts and see 11 rupees shaved off the Vedanta share price, perhaps they'll be lurking in your dividend account. So keep an eye out on that one. Optically, it will be lower by 11 rupees itself. And then we have the big SBI conclave, which is starting tomorrow itself. So we'll get you a slew of opinions and insight from the SBI conclave itself. So that will be what we'll be watching out for tomorrow in an otherwise thin news-based week.
Okay, all right, Mangalam. Well, we surely have those cues to watch out for. Thank you very much for the list. And with that, we're out of time on this edition of Markets Forward. Many thanks for being with us.
CNBC-TV18, embarking on a quarter century of excellence.